there.
Yeah, I can hear you.
Five,
I can hear
four. They definitely did a good job of making sure that we are going live is obvious. Big yellow.
All right. I think we're live. Hi everyone. My name is Simon. I'm the co-founder and CEO of Reveal. It seems like just a couple of years ago we with my co-founders, we decided to go all in on partnership and ecosystem because it was really clear to us that the way company would go to market in the future would be very collaborative and around partnership and around ecosystem. That's why with the entire Reveal team, we are so thrilled to sponsor and to participate to this awesome event. I mean, I'm pretty sure PLX will be a pivotal moment for us, for all of us, and for this great community. And I'm really excited to listen to all the awesome sessions that will take place over the next few days. And by the way, kudos to the Partner Hacker team for putting all this together. It's been so great working backstage with them, and I think we are all really happy to see this movement coming together. So today I'm joined with. I'm joined by Brad Fiedler, the Vice President at Insight Partners, but more importantly, one of our esteemed board members. Brad and I started working together just a few months ago, actually, but it seems we've been in touch and in contact for quite some time. I think the first time we met was probably just a couple of months after we actually launched our business. So Brad, thanks so much for being with us. And maybe you wanna say a few words or share an anecdote on how our relationship started. I don't know.
Sure. And Jared gave me proper warning that the chat would be quite busy here. So if anybody has questions, well, he was right. If anybody has any questions while we're growing, feel free to throw them in there, and we'll try and engage as much as we can. So I'm Brad. I work at Insight Partners, as Simon said. This is now my 6th year here. For those who are not familiar with Insight, we're a global software investor partnering with high growth technology, software, and internet companies that are driving transformative change in their industries, just like Reveal. We're stage agnostic investors. We can be your first institutional check. We can also give you multi-$100 million pre-IPO cash infusion and do a leverage buyout. So everything few and far and in between. We're working out of our 12th fund. It's a $20 billion fund, and the fund size is what gives us so much flexibility with how we invest. And then we're global investors. So we've invested in over 600 companies now worldwide. I personally spend most of my time here thinking, living, and breathing B2B software at various stages, but predominantly Series A and B. And Simon, you know more than I do about the Genesis story, but one of our esteemed associates had their first call with you and came running to the rest of the team to tell us about everything you were doing. And we had we like to think we knew a little something about partner tech. So we knew a little something about the industry. And so I think immediately hit it off with you and began our diligence.
Yeah. No, it was a great partnership, and it's a good reminder also that most successful partnership actually kind of start really early, and we had to kind of build the trust and to get to know each other a little better. For us on our side, get to conviction that Insight was in fact the best partners for us, and on your side, obviously, that we had a solid enough business and a large enough opportunity to really work with us. So today we are here to talk about kind of investing in ecosystems, maybe the investor perspective on that, and also more specifically why startup needs to build more than direct sales funnel. That's the topic of the day. So before we dive in, there is something, Brad, I wanted to discuss with you and touch on. Recently, beside Reveal, obviously the deal was back in March, but you guys also did investments in companies like Workspan or Readavise, and all these companies, they are, let's say, partner tech companies, and they are building products to help organizations scale partnership as a go-to-market strategy. So maybe you can share with us why Insight is having so much interest in the space and is making so many kind of very interesting investments in that kind of companies.
I see another portfolio company is on here. Good to see folks from 90.io. This is great. Uh, so I think we've always been interested in software that helps you do more, and in today's market, even better if you can provide software that helps you do more with less. And I imagine we'll talk more about today's market later. But ultimately, all of these companies provide that you mentioned provide a fundamental advantage in helping B2B businesses create more and convert more selling opportunities. But at Insight, we witnessed firsthand the productization and the tooling for sales teams in categories like sales engagement and sales enablement, and in marketing and in marketing automation and ABM and so on. And ultimately, a lot of those started as more pointed solutions evolving into platforms, touching every department involved in the go to market process: sales, marketing, partnerships. So, what we're seeing now is partner tech is a very high potential space, similar to what we saw in marketing and in sales in the past. The trend we're seeing now is really around elevating your go to market stack, and partnerships absolutely resides in that core objective. Um, I think the other thing is the actual premise of partner tech makes so much sense to us, and we've seen it at a manual level for a long time. But if you can access your partner ecosystem, identify overlapping customer accounts, prioritize those partners who can help you sell more. Ultimately, what you'll get is more qualified leads, like the actual quality and quantity of those leads are greater. Um, and if you're in a sales process, well, wouldn't it be great to identify where you have partner presence in your territory and then solicit account introductions and get actual deal support from your partners? So, for us, the industrial logic for partner tech is very obvious, and then it has substantial network effects as you get the flywheel going. So
Yeah.
we're seeing the results, and so when you see these trends happening again, similar to other solutions we backed in and around the go-to-market tech stack, we want to get behind that trend quickly.
Yeah, yeah, 100%. And maybe beside just investing in partner tech companies, um, have you seen, an evolution in the due diligence process? I know you guys, look at a large number of companies every year. Obviously, studying and understanding their go-to-market motion is a key component of that, because you need to understand how these companies can actually go to market and win in their market. Have you seen the due diligence process evolve to include, let's call it, ecosystem or partnership strategy? I know you guys have done investment in so many kind of incredible
Yeah,
companies.
yeah, and at some point you need to think about how do we standardize the process, because you're looking at so many companies, but every single prospect is going to have its own relative uniqueness. But ultimately, when we engage in someone like you, and when we did, we need to validate all the exciting stuff you, the CEO, are messaging to us in a call. How do we give you the most credit possible for your vision and for your performance to arrive at a fair and mutually agreeable value for the company. um, and I think, like other VCs, that will include financial diligence, understanding your business model, that it is long term economically viable, diligence your product and your market, who's your competition, how do we compare to them, sizing the market, and hearing directly from customers. But I think there's another higher touch engagement that at Insight we like to run, which is through our on-site program. And on-site is an operational team of over 130 people here that serve two greater purposes. The first is probably the most important, which is to help in a consultative manner for our portfolio companies. That's their big value add. And we've structured the team into various centers of excellence: a marketing center of excellence, a sales center of excellence, a product and tech center of excellence, a talent center of excellence. And each team would combine former operators with best of breed consulting talent. So where you need help, you kind of pull a lever and you have folks who've been there, done that, lending a hand. But point being, they engage with companies pre and post investment. And so back
Yep.
to the original question around our diligence process, we often pull in on site who's working with 400 plus active companies on a daily basis, and we have them help diligence these companies and give those, at the same time, give those prospects an opportunity to learn what onsite can offer. So at this point we have a sense of the momentum or the growth, and that's a great indicator of product market fit, right? The business model is sound, the market is exciting, and the company, both from the market work and the customer work we've done is position favorably within that market. That's a pretty good starting point. But to get full credit, we'll want to understand the maturity of your go-to-market organization. So, we know you have product market fit, but how about go-to-market fit? And if you want a high valuation or you want less dilutive capital, if you claim a big forecast for next year, well, we'd expect to see some clear indicators within your go-to-market setup that would evidence a high level of repeatability in your ability to acquire customers.
Yeah.
So we might engage our sales center of excellence to speak to your sales leader and understand, how do you think about pipeline creation? How do you think about conversion and forecasting and hiring and ramping AEs? And ultimately, the end state goal is to see, well, how mature has your sales org developed? And again, it's back to that full credit for the valuation you want. What I have enjoyed over the past year is partnerships becoming a critical piece to the diligence process. The most mature go-to-market organizations are definitely already there. And that's part of the maturation process, developing a robust partner approach. So it's a nice way to show off and prove maturity. And what I've found is the best companies are now proactively walking us through their approach to winning new and existing business. So they're not waiting for us to ask the question. They're beating us to it and saying, hey, check out all the processes we have in place to ensure we hit our forecast. And increasingly so, partnerships is a big part of that conversation. And obviously, it gets me excited.
Yeah, no, I love it. And really making partnership a part of the go-to-market fit evaluation is it really makes sense. And usually when, companies that are embracing the partnership mindset and culture very early on, they tend to be very successful on the go-to-market side. There is a question actually from the audience, and I have the answer, sorry. How about a partnership center of excellence? It actually exists. It was just created. So I see the question from Jill is getting quite a lot of likes, but I think very recently you guys hired someone who used to head up the Celonis partnership ecosystem. Her name is Claudine, and I think she's gonna be in charge of helping portfolio companies figure out what it means to build an ecosystem, how to really leverage it, and turn it into a growth lever. So that's something we are at Reveal very excited about. But I'm sure most of inside portfolio companies are also super excited to see this. So maybe one last question on this investor view of partnership. Like you see it on quite a few boards, and have you seen partnership and ecosystem becoming an important topic in the boardroom? And maybe do you have example of companies you work with that have been successful with it?
Yeah, I think the more mature companies I work with, the later stage ones, are at a place where the board meetings consist of the CEO doing a 30,000-foot overview or summary of the business, and then basically handing it off to other leaders of key departments within that business. And so for a long time, that would be sections like a section on finance, a section on sales, marketing, CS, product, and now I have companies with partnerships as its own section, and a designated partnerships leader to lead that section. So I think, needless to say, as investors in you guys and other partner tech companies, we love seeing that trend. I don't need to name specific companies because that's sort of for them to share. But yes, I've seen several companies be successful with this. What I hear most often is that partnerships as a channel is a low-cost, efficient way to drive new business. It's a really exciting, section of the board meeting to hear, and it's refreshing, particularly right now. That's why I personally pitch partner tech to companies I work with who are not actually using this yet. Because if you think about the market environment and the overall cost of capital, which has gone up and fast, then finding efficient channels to acquire customers is much more valuable. Efficient growth now more than ever is the best way to create enterprise value, and partnership tech is an excellent way to achieve that.
Yeah. So let's maybe take this opportunity to kind of take a step back and talk a little bit about the macro view. Of course we are here to talk about partnership and ecosystems, but it's always, while we have you, why not asking for the your perspective on the market? Unfortunately, we see that the market is getting more and more complicated, to say the least. Many companies are struggling, or at least are forced to be more efficient. And basically, after a decade of growth, the downturn we are experiencing is pretty severe. So, what's your perspective on the current situation, and what are your advice for portfolio companies, and how do you guys think about this overall?
Yeah. So for us, we've invested, we've focused on investing in and scaling software companies for 26 years now. And so we've seen downturns before, and we have seasoned and sophisticated investors and operators who can not only guide portfolio companies through turbulence, but ideally they can invest through it as well. Um, we still think that there's great investments to be made. Insight has always prioritized quality companies that I would say are both mission critical and have viable business models. That's the focus of our investment strategy now, but it's also the focus on how we advise our companies. So you can't rely on tens of millions of dollars to grow and to build a good business. At some point, you know, you have to build a self-sustaining company. And so when times like these take place, I think your force function to think and execute on that idea sooner than later. Because we got a question there, but because raising capital is going to cost you more. Um, I think the other thing we're talking a lot about, and the other piece to this, is the uncertainty over the time horizon that this poor macroeconomic environment actually takes place. So, Insight, and I'd argue no one else around there really has a. We don't have a crystal ball. We can see what's happening, but we can't predict how long it's going to stick around. Um, to us, the best thing our companies can do is we actually just talked about this very recently, but prepare for the downside scenario. We're all pleasantly surprised if things go really well, or if the macro environment. But if the macro environment stays this way for longer than we expected, we just want to feel good that our portfolio companies, they're prepared. Um, to us, there's still no better time to be a software company. There are obviously hard decisions that everyone needs to make, but we feel well equipped to support our portfolio as they make them.
Yeah, no, okay, super insightful. Thanks, Brad. And maybe more specifically, if we double click on, what it means for go-to-market and go-to-market strategy. What are the trends you guys are seeing in terms of go-to-market approaching this, or more than approaching, experiencing this downturn, I should say, and maybe what are the key go-to-market metrics you think we should focus on next year, right? As founders, as operators in hyper growth companies.
I think it's efficient growth, and efficient growth. I mean, I would just look at every acquisition strategy you are utilizing, go channel by channel, and see how they pay back. And that actually touches on the metric that I would look for. What Insight looks for to identify efficiency is growth and how much it costed you to get there. So what are you spending on selling, partnering, marketing, and ultimately how much new or upsell business is that generating? The KPI for us that's our guiding light, I would say, is CAC payback. How quickly do we recover our cost of acquiring business? That ends up being critical. The lower the number is, obviously, the better. But ideally, that number isn't just low; it's also consistent. Because consistency of CAC payback gives us much more confidence in our ability to forecast. So I think back to the question, I would go through every effort we make to acquire customers and see which ones are the most efficient. That's why I think we're seeing so much pull in the market for partner tech at the end of the day. It's a very effective and efficient way to sell. It's a low CAC, that benefits from enormous network effects. Anyway,
yeah. No, 100%. And actually, there is a question in the chat. Like we mentioned that you guys are seeing more and more, partnership leaders joining the board meetings to address that aspect of the business, but maybe less with early stage companies. I think that's it's a fair statement in general, because and maybe I can take this one because we are working with so many companies trying to build or scaling their partnership activities. It's very true, because partnership are often seen as a more complex process, something that requires more time, that doesn't necessarily have the short-term impact one would expect. So basically, you tend to see mature companies investing and kind of really going all in, and early stage companies are not necessarily embracing partnership as a go-to-market lever, which I think is transforming and changing. To your point earlier, Brad, on kind of efficient growth. The more we progress, the more we demonstrate that creating a partner ecosystem around your company, integrating with other products when you are a SaaS product, is effectively driving more leads and higher quality leads with a better CAC payback, and you can go after accounts that are more likely to purchase your product, right? So this is really interesting and convincing and bringing all these early stage companies to embrace, let's say, the partnership game is something we very much live for and try to advocate for. So maybe go ahead, Brad. Sorry.
Well, just as investors in a boardroom, we're talking a lot about reforecasting, remodeling, and figuring out where can we reduce spend and things like that going into the next year of uncertainty. But when it comes to efficiency, I think like you're not pulling back just for the sake of pulling back. You're not spending less just for the sake of spending less. You're really trying to identify where are you less efficient and where is it just not worth it. But if you're finding channels like through partner tech and through programs like this where it's incredibly efficient, the right board member is actually going to be like, you should go full throttle. Like, why not invest way more into that when you're seeing that, again, when you go channel by channel and you look at this effort and the dollars and resources you're deploying against it, and you're seeing that it's returning way more dollars and it's way more effective. Well, I would imagine we'd spend more money into that, into the strategy.
Yeah. And if we go back to kind of, this, the topic of the day, like why we should think about building something else than the direct sales funnel, because frankly it has worked and it's still working in many areas and in many industry, but it's clearly getting harder and harder to win and to go direct, because there's just so many companies trying to sell to the same people at the same time and capturing and buying their attention basically. So basically selling direct is increasingly hard and increasingly costly. So what would you say is the kind of the tipping point for the direct funnel to kind of becoming more kind of broken, right?
I wouldn't say I struggle to see that it doesn't work. I think that when you get bigger, you need to reduce dependency on any one go-to-market strategy. You also just need to get more sophisticated, and there's much more available now. Like, the trend we're seeing is taking a data-driven approach to everything go-to-market, and so reduce the randomness. A buyer shouldn't want to buy from someone calling out of the blue, and a seller should be more data-driven than using an overly prescriptive template to gauge interest in a random set of potential buyers. So utilize intent data, utilize company data, account data to drive, who you place a call to and inform how you message the sale, or utilize partner tech for a warm introduction and a qualified lead, because that the buyer is already in the market for what you offer.
Yeah. And prior to launching Reveal, I wasn't a partnership leader per se. I've been an entrepreneur and more of a sales guy my entire career. And it feels like partnership and ecosystem to me are more a solution to the, let's call it, the top of the funnel problem than just a way to increase kind of win rate and velocity on existing opportunity. By that I mean, at the end of the day, when you have a mature sales process and go-to-market strategy, it all comes down to going after the right accounts at the right moment and making that choice probably defines the outcome of your quarter, your month, or your year. So would you agree? Is it me because I'm totally biased, obviously, because this is what I've been trying to build over the past couple of years, but do you think that the top of the funnel question will become increasingly critical? And do you think that ecosystem and partnership are, if not at least part of the solution?
like without a doubt, absolutely. I think theoretically, this should be like the best source of technographic data out there. If you're aware of a company's tech stack that can qualify the lead and inform how you message and position your product, um, so we have the ultimate database of technographic data at the end of the day. And as you scale, the network effects, has that grow exponentially. This is a critical piece of information to enable account-based execution. If you think about it, if I know prospect A has sales enablement software, then prospect A probably qualifies for sales engagement software. In most cases, your partners share the same ICP, your ideal customer profile. So if I'll use our portfolio companies. If I'm Sales Loft, I want to know every company in the world using Showpad. To me, if I'm responsible for generating top of funnel, I'd want that information as soon as possible. Um,
Yeah.
Partner tech gives you that information and those signals about your target audience, and accessing and leveraging that information enables sales teams to ultimately work higher quality leads and be more efficient.
Yeah, couldn't agree more. All right, Brad, I think it's time to wrap up. All thanks for
All right.
joining. Thanks so much for being with me, Brad. It was a lot of fun, and we wish you a great PLX event. Thanks for attending, and we'll see you soon.
Thanks, everybody. Thanks, Simon.
All right, all right.